Hi, good evening, everyone. Welcome to today's webinar. My name is Trent, and I'll be your host for tonight. Okay, so welcome to today's webinar where we're going to share to you on the title Contract for Difference, What to Expect in Malaysia Stock Market for 2026. So I hope all of our audience out here is able to learn something new about the Contract for Difference today. Okay, and we are very honored today to have Mr. Koh Se Siang, our Head of Retail Research from CGS International Securities Malaysia, to join us today to share on what are the potential stocks and also sector review on the stock market in Malaysia for this year. Okay, so stay tuned. And before we start, let me do a brief introduction on the Contract for Difference. Okay, this quick disclaimer, whatever presented in this webinar is solely for education purpose only. And make sure to consult your representative when you before any investment made. Okay, so this is the agenda for today. I'll briefly go through what is CFD and what are the mechanism of CFD and also the other fees and also risks associated with CFD. Okay, so what is CFD? So CFD is actually a contract that allow the buyer or seller to gain exposure to an asset without having to take ownership of the underlying instrument, whereby the differences in the settlement between the open and closing trade prices are cash settled. Okay, so basically it allows the investors to participate in the price movement of an underlying asset. Okay, so what underlying asset do we offer? We offer a few types of CFD. First, share CFD. So the underlying asset is shares. So for example, if you are interested to have a position in Gamuda, which is the Gamuda share listed on Bursa Malaysia, what you can do is, alternatively, you can do is to buy, to long or short Gamuda CFD. Okay, Gamuda. Then, other than that, we also offer REIT CFD and also ETF CFD. Okay, some example of REIT CFD is like Pavilion REIT. Okay, and ETF CFD, something like FTSE Bursa KSI ETF, okay, which is listed on Bursa Malaysia. Okay, so for our Bursa CFD, there are a few criteria that we must comply with the Securities Commission requirement. First, it must be listed on the main board of Bursa Securities. And there's a few other criteria with 500 million in market capital in the past 3 months. And also, in the case of a newly listed company, it must be listed for more than 3 months and a track record with a market cap of minimum 3 billion. Okay. For more information, you can go to Securities Commission website in the link below. Okay, so what's so special about our CFD? We are using a direct market access model instead of a market making model. So what does direct market access model, in short, DMA means? So whatever orders that client trade will be directly reflective of the exchange. Okay, so when our CFD client place a trade through our platform, it will be directly sent to the exchange, and the order will be reflected in the client trading platform. Okay, so that's a direct market access. Whereas a market maker access, you will be trading with the broker itself. Okay, so what are the benefits of trading CFD? Okay, let me share to you. There are 5 benefits. First of all, leverage. Okay, so for example, you want to buy a Gamuda shares at 4 ringgit and 10 cents. 1,000 units of Gamuda share at 4,000 ringgit and 10 cents. All you need to do is put down a 10% margin, which is only 410 ringgit. Okay, as compared to traditional shares, we will need the full amount of 4,100 ringgit for 100 units of Gamuda share. Similarly, we also offer US share CFD like Nvidia Corp and also previously mentioned IGB rate. Okay, so basically, 20% margin requirement means traders will achieve 5 times leverage, whereas 10% margin will grant trader 10 times leverage. Okay, so why trade CFD? So with leverage, the gain and losses are magnified. Okay, so it's a double-edged sword where traders will have to weigh between earning more or potentially also losing more. Okay. Now, the next one is the benefit of trading CFD, including you are able to long and short the listed share CFD. Okay, so when market is up, CFD investor also can earn a profit. When market is down, investor can take a short position and also make a profit. Okay, another benefit is there is no expiry date of contracts for CFD. Unlike futures, like for example, DBS futures, okay, it will be expired on the second last business day of the contract month, where CFD, there's no expiry. So client can hold as long as they want. Next, transparent pricing. So we are using a direct market access model. Whatever you see on our platform is actually reflective of the real bid and ask and also market depth on Bursa Malaysia. Okay. So whatever you trade will be reflected on the exchange. So it's all of these are very transparent. There's no hidden prices or there's no spread on top of the prices that we charge. And lastly, one very important benefit of trading CFD is the participation in corporate action. Okay, so for example, if Apple, if let's say you're holding Apple shares and it announced a 26% dividend, so for CFD trader, you will be entitled to the same amount of dividend as well. Okay, this will be automatic credited to your CFD trading account. So other than dividend, there's bonus issue, share split or reverse split. All of this will be automatically adjusted to your holdings, to your portfolio holdings of CFD. Okay, but one thing keep in mind, CFD are not entitled to any voting rights here. Okay, then in terms of settlement currencies for CFD, it will be settled in the respective settlement currencies. For example, if you're holding Bursa stocks, it will be settled in ringgit. If you're holding US stocks, then you'll be settled in USD. Okay, and one thing good about our account is that it will not be automatically converted to your preferred base currency. Okay, it will be always settled in the currency exchange currency. Okay, now let me share to you what are the fees associated with CFD trading. Okay, so for example, if you are trading Malaysia stocks, okay, there will be a commission rate of 0.35%, commission rate of 0.35%. Okay, and we can see on the table, if you're buying 5,000 units of XYZ shares and at an average trade price of 10 ringgit, okay, there will be a commission will be 175 ringgit. However, if you are buying a smaller amount, there will be a minimum charge of 40 ringgit. Then the other second cost other than brokerage is the overnight financing. Okay, so the financing fee will be calculated daily. Okay, and this is one example of the calculation. So for example, a client is holding a long position in 1,000 XYZ CFD at price at RM10 from day 1 to day 2 for 1 day. Okay, so the rate will be based on CBR. CBR stands for central bank rate. FR is financing rate. ER is effective rate. Okay, so basically, we will there will be a 6.73% per annum interest on holding one per annum, and 1 day will be divided by 360 days. Okay, so for example, if client holding a long position of 10,000 ringgit worth of portfolio, then the long overnight financing will be 18 ringgit and 69 cents per day. Okay. And if client is holding short, then it will be lower short financing fee. Okay, so it will be deducted from the 3.75% markup, which is client only need to pay 0.77% per annum. Okay, so if 1 day it will be divided by 360 days. So if client is holding a portfolio of 10,000 ringgit, then 100,000 ringgit, then it will be 0.77% divided by 360 days will be 2 ringgit per day. Okay. Then this is a calculation on how to profit from a CFD as compared to a traditional shares. Basically, to show you, by trading CFD, actually you can through leverage you can earn a bit more. Okay, so for example, you are buying we use an example of buying 100,000 units of Maybank stocks at 12 ringgit. Okay, so with initial capital on traditional stock, you have to pay a full amount of 12,000 ringgit. But with share CFD, you need to pay you need to pay a 10% margin. Right? Your initial capital will be only 10% margin, which is 1,200 ringgit. And after deducting all the commission on the buy and sell side, okay, we can see from the table that traditional shares only return 3.45%. While listed share CFD, you have almost 10 times return, which is 34.42%. Okay, so basically this is how CFD works in terms of leverage. But however, if client is making a loss, okay, then the losses will also be magnified. So for example, from this example, traditional shares will give a net loss of 4.85%, while CFD will give a return of 48.61%. Okay. Okay, so what are the risks associated with CFD? So actually CFD is a very complex and speculative high risk product. So and also it's only available for sophisticated investors. So these are some of the risks that are associated with CFD. Make sure before you open account, make sure your representative had explained all the risks associated with CFD. Okay, so before you open a CFD account, make sure you have answered this question. Okay, is the product suitable for you? Okay, so how to trade CFD on our platform? So basically, on our platform, there's have all the essential features which you're able to view your account summary. You create a watch list. You can place buy and sell order. Input contingent order. Contingent order means OCO order. So basically, you can input the take profit and also stop loss order at the same time in one order. Okay, and lastly, you can view your historical order and also executed trades. Okay, or your history of your trading activities. Okay, so on our platform, what are the order types that are available? We have a market order, limit order, stop loss order, and also stop limit loss order, and also take profit order. These are most of these are essential order that you can uh use on most of the trading platform. Okay, this is a screenshot of our interface of our trading platform. It's available on web-based, as well it's available on browser as a web-based, and also available on mobile. Okay, so basically client can trade on the go. Okay, so the next thing is I would like to share to all of you, if you are interested to learn more about trading CFD, if you're interested to learn more about trading CFD, you actually can go to our website. So on the website, there's a few things. Okay, whatever I presented earlier, there's actually a slide on the education guide. Okay, education guide on showing you on the introduction of CFD. So basically, there's a few video where you can access and you learn more about CFD. We will show you on uh, basic mechanism of CFD. Okay, then the next thing will be how to use the platform and so on. Okay. 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 So going back to the okay. Okay. So just curious about today's audience, right? Because we have quite a number of audience here. So may I know any one of you uh are currently trading actively in margin account? If there's anyone that's trading actively in margin account, put can type A in the chat box. Okay, okay. So far, I think most of the audience are a bit too shy to admit to join the conversation, but no worries. Okay. But because CFD is a product that's quite similar to because it's product leverage similar to a margin account. So any investors that are already trading on a margin account can actually try to have a bit more leverage on trading the stocks market as well. So before we pass on to Mr. Koh Sen Siang, our head of retail research, okay, we'll take just a few more moments for him to get ready. Okay, there's some issue on his laptop.
Yep, I'm back. Yeah,
Okay,
again. Thanks.
okay. So pass to you, Se Siang.
All right, Trent. Yep. Good evening, guys. Hope you can see my screen. Yep. So I hope that you guys have at least a rough idea what CFD is, and I think personally, I think it's a very good product to use, especially in the coming months. So let me just do a quick intro. My name is Sesiang. I'm the head of retail research here in Malaysia. So I've been with the company for a very, very long time. That doesn't really matter, but I've seen the ups and downs of the stock markets. Yeah, many cycles round. So, uh, what I'm going to say is that in the next few months, possibly in the coming years, you will probably see something you have never seen before. So the closest you have gotten to something you have seen, or at least the nearest I can see was in 2020, 2021 during the COVID times. So if you imagine what happened in the COVID times, then oh, this is slightly late. Yeah. So imagine what happened in the COVID times and how active the market was. I think going forward, the market will be just as active, if not even more. So basically, so what to expect in 2026? I've just got one word, which is bull. So it's going to be a bull market. Um, as I can see from the number of participants here today, I think the market is hot. So I guess you guys all agree with me. The market is at least starting to attract a lot of interest. Uh, so if we go back 1 year or even 2 years ago, markets were active in a bit, then last year wasn't so. But it is actually just a nice building or a step forward. So two steps forward, and it took one step back. So now we're getting ready to actually take the step forward over the next few years. So it will not be easy, but I think at least we will be stepping higher from here on. So what to expect in 2026? Well, 2025, we mentioned that we are in a bull market. In April last year, nobody actually believes us, given that, how bad everything was with the Trump's tariffs and stuff hitting global markets. Everybody was scouring around looking for reasons whether to sell, to buy, or well, mostly to sell and what to do with their portfolio. For us, it was a clear sign that the market has bottomed, and we were pointing or at least suggesting that the markets were starting to uh, head higher, and you should be putting some of your hard-earned money into the stock market. Okay, so why we think the bull market is now here, and why we think the next few years it will be very good. So basically, 2025 ended where KLCI hit a new 5.5-year high. So within a month, it's now at its 6.5-year high, 7-year high right now. So that in itself tells us that the bull is here. Okay, so we've been in consolidation since 2014. I think the consolidation is done. The major sell-off that we saw in April was likely the end of the whole consolidation from 2014, and this is going to be a major bull market, and we are only at the beginning of one. So you can see at the start of the year, I think if you read the Edge, as a summary, everybody had or at least the street had their targets between 1,007 up to about 1,008 plus. And our fundamental year-end target for KLCI is 1,810. So we were among one of the highest, but from a technical perspective, at least from last year onwards, we already knew markets were going to hit to all-time highs, pushing beyond the 2014 high at about 1,900. So we're looking for the index to go up to about roughly, just based on the triangle measurement, is roughly about 2,180. So it's not going to happen overnight, definitely. But over the coming years, we expect prices to push beyond 1,009 and at least go up to about 2,000 and beyond. So I don't think you have not many people out there in the market believe so, but based on our studies of the charts, we think that there is a good chance we will be heading there. So if you zoom in further, the current move is only just the beginning. We are in what we call a third wave scenario where prices start to rally. So it's very similar to Singapore last year. When we spoke to fund managers or even friends, or at least my friends who are fund managers in Singapore who trade Singapore market, everybody was saying just there's nothing to buy in Singapore. It's only the three banks. But over the course of the year, you can see Singapore has rallied quite strongly, and that sort of scenario may be taking place or getting ready to be should take place in the coming months and years here for the Malaysian market as well. So right now, it's only the blues that are moving. I think when prices, or at least the index goes above the 1800 levels, I think the market will start to be more active, and the mid caps and the smaller caps will soon follow once the market actually go beyond 1800. So right now, at this exact point in time, there is two short-term possible outlook. So the long-term, we think that is definitely a bull market, and it's just not going to be a bull market, it's going to be a mega bull market. And in the short term, however, there are two possible scenarios. The one that we are leaning on right now is that prices is just going to head straight up to about 1800, 1812 to about 1890 or so, before we see some sort of a major pullback. So the other alternative scenario is that the current move may continue on slightly higher beyond the 1771 levels. Then before we see a pullback that was going to last a few weeks, before continuing on in the uptrend sometime closer to the second half of this year. So it's either way, we are still looking higher. It's just that whether we're going to stop immediately after Chinese New Year or a few weeks after that, or it's just going to shoot straight up to 18 plus. So if you zoom over to a slightly larger market, if you look at the AMAS index, actually broke above its key resistance trend line from its all-time high in 2018, last month, so in January. So it tells us that the broader market is also getting slightly more, at least the fund managers are now paying more attention to all the sectors rather than just the financials and several sectors. So this way, it tells us that the market is broadening out. So that also, it's a good sign to suggest that the bull market is also starting to get, is heating up and it's getting ready for a very nice move to the upside. So the high-low structure from 8,100 also supports the idea that there's more upside to come. So I think if you want to watch, you better watch the AMAS index. So if it takes out its all-time high 2018 at about 13,450 levels, I think that should signal we are going into this mega bull market that I'm mentioning. So what is going to kickstart this? So if you take a look at the ringgit, I think it's not new anymore. From where we were shouting out last year, I think the good thing is that unfortunately, most of this news, most of this reports and stuff only goes out to the Insti side. But nonetheless, I'm sharing here with you right now. So we see the multi-year weakness for the ringgit is done. Since the 1980s until now, we see a 5-wave rally. So once 5 waves is done, it will go into a correction that was going to last years, potentially decades as well. So right now, the immediate target is going to be 3.86, which is the 2017 low or so. But longer term, You can see the previous fourth wave is roughly about the 3 ringgit level. So that is very likely, based on theory, that is very likely where the market will head, or where the ringgit will head over time. So there are a few short-term levels that we're going to look out for, which is going to be 380 and 337. So we think that we're no longer, or the ringgit is no longer going to push beyond 472, which was the closing high for last year. Uh, yeah, so I think we're going to see quite a bit more downside to go, or at least more strength for the ringgit in the coming months. So that is going to kickstart what we think is going to be the mega bull market, as funds are already starting to flow into the Malaysian market. Right now, mostly it's all in the MGS side, but I think in equities it's also starting to pick up. So one thing is that if you notice, foreigners has been selling for many, many, many years. Uh, from the records that we have, foreign funds, it's at least the level of foreign funds is at its lowest level ever last year. So I think they can only go up from here on, and the ringgit is also starting to show that strength. I think that is actually favors that more funds or more foreign funds is likely to come in. As you can see, there's quite strong buying in the blues and mostly the banks over the past few months. Okay, so for which sector we think that could outperform? So we continue to favor financial, plantations, consumer, and property for 2026. Okay, we are also keeping a close eye on tech and construction because these are still in, or at least still in preparation for its bullish move in the coming months and years. So we were always been positive in financials, but plantation, we mentioned that it was sort of like it's going to be a surprise, and it has outperformed quite a few sectors last year. So I think plantation will continue to be strong, but in the near term, plantation may see some sort of consolidation after a strong run last year. But any pullback is going to be a nice buy for plantation stocks as well. Consumer property as well. I'll show you the charts as we go along here. So in terms of those are the bullish ones. So the bullish sectors we like, or at least we think from the charts or momentum wise, finance, plantation, consumer, construction, property, tech, industrial products, REITs, and transport. All these looks bullish to us. When we say bearish, it doesn't mean the sector is going to tank. It's just that it's still in consolidation, not quite ready for its next move up. But for us, I think all this, the long-term consolidation should be coming to an end pretty soon. It's just a matter of time from where we can see. So right now, we could easily put KL Construction and KL Tech into this bearish list as well, because they're still in consolidation, but it's just getting ready for its next move out. It's not quite ready, but I think it should be, the consolidation should be done sometime this year. Yeah, so the other strong one, actually the long-term ones that are strong is also the utility side. So it has been in consolidation since 2022, 2024, in 2026, likely more consolidation for a little bit more, a little longer, but I think is also a sector that you may want to pay attention to. So the potential sectors that could surprise us on the upside is property, energy, and telecommunications. So, okay, let's quickly just move on to the sectors. Finance, very strong, all-time high. Nothing much to add here. I think this one is going to continue. So right now, the next target from here on is roughly about 13% from current levels, which is about 24,500. Then the next target is about 26,400, which is about 22% upside from current levels. So we continue to favor finance. Definitely, this is if the index is going to fly or the index is going to move. Finance has to move, so there's no choice here. But you can see the candles are also getting longer. So it's likely suggesting that the strong momentum is also starting to get in. So this is a monthly chart. So it tells you that big moves are coming. It's starting to show. Maybe in the short term, you could see a little bit of pullback, but any pullback is deemed as a chance to buy for the longer term. So what I'm going to tell you right now is all for slightly longer term period. So if you're a buy and hold, if you're looking to DCA, then these are actually a very good chance to actually run your strategies. So for short-term trading, it might be slightly different, but nonetheless, the major trend remains up for most of the sectors in Malaysia. So plantation, it's just heading for a long-term breakout. It's been in consolidation for the past 14, 15 years. We think that the consolidation is done, is now starting to show signs of coming to life. The immediate resistance is about 8,840, which is the triangle resistance. Once we break out of that, it's likely to see a major move to the upside. So prices has been condensed for 14, 15 years. Once we see a breakout, this prices is really going to run quite strongly. So we still maintain a long-term buy here for plantation sector, but immediately, very likely we'll see some sort of consolidation near term for plantation, but that should not deter you from looking at plantation stocks going forward. So consumer products is also coming to at least a medium-term resistance trend line from its all-time high from 2018. Once we break out above that line and then go above the 615 levels, that should signal the start of the next move up that is easily going to take prices beyond the 800 levels here for the consumer product side. So again, we still like consumer. I think a lot of fund managers also like consumer given the government support and also the tourism that is going to bring in quite a bit of tourism this year. That should kickstart the consumer sector. That's the argument, or that's the narrative for the consumer side. But based on the charts, when prices break out of this, high chance we'll see a strong move to the upside here for consumer products as well. So just moving on to construction. So why we like construction? Despite construction has been trading in a sideways band for 25 years. So we are testing the top end of the sideways band. At least this is going to be the sixth time it tested, but it couldn't break. But I think in the coming months, we should see a nice breakout of this the sideways band. And once we break out, is very likely going to push beyond its all-time high at 600 levels. So prices could easily double from here on if it breaks out above this 25-year resistance. So right now it's coming to a nice support. Yeah, we shouldn't be jumping in too soon. So we wait for the market to actually tell us when to get in, or at least show us that there are buyers at current levels. Then only we should be looking to get in. But this is definitely a KIV for us. Construction is at a very key level. We are looking for some sort of a reversal to take place around now and possibly for the next couple of months. Once we have that, then that could potentially be a nice level to start getting into construction stocks again, looking for that major breakout here for construction. So for property, why we like property is it's now trading it's just moved past its 5-year high. It's very similar to construction. It's been stuck in a major 25-year resistance trading band, but it's now moving just past its 5-year high. We should easily see prices pushed on to test the 25-year resistance level, which is roughly about 20% from current levels. So there's still a little bit room to go, but I think once construction push past its 25-year high, likely property is likely going to follow. But near term, property is going to outperform construction because there's some momentum going into property stocks. At least for the first half, we think property will continue to outperform construction stocks. Yeah, that should see quite prices to test its 25-year high. So same thing here, if it breaks out above the 25-year high, we are looking for the index to go beyond its all-time high at 3,500. Again, that is easily about double or if not more for the property side. So technology, everybody has been bullish technology for many years. So, but however, we have been saying that tech is in consolidation since 2021, 2022. But we think that the consolidation is done following the April sell-off. Prices tested the medium to long-term support trend line from the 2013 lows and then rebounded, and it's now showing signs that we are starting to see some at least a smaller higher low structure taking place. So that should signal the end of its consolidation from the 2021 highs and the start of a bigger move to the upside, or the resumption of its longer term uptrend here for the tech sector. So we still need some confirmation here because right now it's still in consolidation. But the good thing is that it's trading above the 200 month moving average, which is the rate moving average line. That is one positive sign. The other positive sign is that you can't really see here, but it has pulled back to its 62% and is now starting to show a five-wave move up, which should suggest that it has bottomed and more upside is likely to follow. So, but if prices do break below 38.57, then likely there's going to be more consolidation first before the longer term uptrend resumes. But for at this point in time, at this current point, we are looking for some sign of a turnaround. You should at least be looking to get partial loaded up here for the tech sector. And once it breaks 64.55, you should be looking to buy more, add more to your tech sector stocks in the coming months. So just quickly move on. The other one is industrial product. Also same thing, consolidated down to about the April lows and then form a nice low and it's starting to push on higher. So it's coming to its resistant trend line at about 188. I think breaking that should signal the next move up to at least test its 15-year high at about 217. Okay, so moving on to a sector that could surprise few. So energy sector has been in consolidation since the 2020, since COVID years. It's chopped sideways and it looks like it has completed its five-wave triangle. So the 607 level, which again is the April low, is a key level to watch. Near term, we could still see more weakness, but I think once again, this one needs confirmation of a reversal that's going to take place. But again, like construction, we are keeping a very an eager eye on energy as well. So we are also very positive on crude oil. So that should also give the energy sector a big boost over the next few years. So for now, I think it's still in consolidation, but I think the next few months should give you a nice platform to start to look around for the energy sector, looking for ideas that could actually kickstart the next move up. So the other one is telco. Telco again, April lows was a major long candle, but prices is now sitting just above the April low. So again, if there are no reversal signs from here on, and it breaks the April low, then likely we're gonna give this the boot. So we can just forget about telco and media for at least the short term. For now, it's really a KIV for if it continues to break lower below the April 25 low, then you should just give it up for the time being and concentrate on the other sectors. So in terms of stock picks, we just picked the banks. So for now, most of these banks are at all-time highs, continue to look higher for one Maybank, target 1280, 1475, and 786 for the next months and possibly up to 2027. So as long as continue to stay above all the trend lines at about 930, 980, we will still be looking higher. So if Maybank, there is a pullback for Maybank, 1050 to about 1180 is a nice band to buy, although it's a huge band. But anywhere in between those band is definitely a nice buy for the longer term for Maybank. CIMB, same thing, long-term uptrend, long-term targets at about 960 and about 1070. You can clearly see it's well supported by support trend lines and all the moving averages, everything still pointing higher here. So if there is a buy zone that we're looking out for is about 765 to about 790. That will be a nice entry level here for CIMB. For public bank, also at all-time highs, continue to look higher. The buy zone for public bank is roughly about 455 to 490. It has upside target at about 625, 650, and then 674 here for public bank. So all three momentum still seem to be rising nicely. So any short-term weakness would still be a buy, at least for us on the banking or financial side. Yep. Yeah, so in the midst of all this chaos, there will always be opportunity. So that was one of the best quote could have been done in April last year, which at least some of us actually caught some of the lows. Yeah, we still continue to think that we are in a major bull market and we are only at the start of one. So get ready, put on your seatbelts, and we should be taking off very soon. So yeah, that is all from me. I'll pass it back to Trent for now. Thanks.
Okay, thanks, Sesiang, for the wonderful sharing. Okay, so previously, Sesiang mentioned three stock, which is Maybank, CIMB, and Public Bank. So to all investors out there, if you are interested to trade, this three CFD actually is available on our platform. Okay, and the initial margin for these three stocks is actually only 10% in initial margin, and because they are KLCI index stocks. So what it means that client can actually get 10 times leverage on these three stock CFD. Okay. Okay, so now we move on to our Q&A session. So we have a few questions here. Okay, so the first question from an anonymous attendee, which is can we use cash to trade CFDs to avoid financing interest charges? Okay, so the answer actually is no, because the cash will be used as a collateral for the position in CFD. So client will still have to pay the financing fee, the long and short financing fee, which I've shown earlier. Okay. And also, if you have missed out the previous slides, previous financial fee table actually is on our website as well. Okay, www either at iTrade website www.itrade.cgsi.com.my or at our main website, which is www.cgsi.com.my. Okay, so another question is to Sesiang. Okay, the attendees ask, what's your view on Gamuda? Because it has dropped a lot recently.
Yeah, I think Gamuda is a chance to buy. 1 second, yeah. So yeah. Yeah, we're just finding a nice entry level here for Gamuda. So yeah, so Gamuda is sitting at a nice support zone, but you can see prices has actually breached this. So this medium term support trend line. So that could signal near term weakness. So maybe from this level here, you could see a bounce. But if prices do fall down to this 325, 350, I think that is a very nice entry. Again, whether the market allows you or not, I'm not too sure at this point in time. But from a short-term perspective, if you're looking to start to look to the upside, there are no signs of a reversal just yet. So maybe it's still best to just wait if you're looking to buy. But for now, we think that Gamuda is in consolidation near term, possibly for the next couple of months at least, if not more, for the time being. Yeah. But if the market do drop and there's a sell-off down to this 325, 350 zone, I think it's a very good opportunity to look for Gamuda. So the long-term picture for Gamuda is up. the consolidation or the move up does not look like it's complete. So there's still potential for prices to go to all-time highs. But near term, we could still see some weakness near term, at least build a base to get ready for the next move higher. Yep. Back to you, Brian.
Okay, thanks, Sesiang. Okay, thanks, Sesiang, for the wonderful sharing on Gamuda stock. Okay, so everyone can look out for to potentially accumulate some position while it's sideways currently. Okay, then we have one question from Facebook. Could there be a seasonal post-Chinese New Year rally?
Um, Seasonally, January has been always been a good month. February is also a good month. So yes, so that's why Chinese New Year has always been January or February. Both of these months, since 1977, has always shown, or at least on average, has always shown a positive month. So that's why you get that seasonal buying during Chinese New Year or around timing of Chinese New Year. So, but when it comes to March, then it becomes flatter. So it doesn't. So potentially March could also see some correction or some pullback near term. Yeah. So that's why you get that seasonal move in January, February lah.
Okay, thanks, Sesiang. So, and another question is, what's your view on rates, on the rate sector?
REIT sector, if you take a look at the KL REIT, is still pointing higher. So, yeah, still pointing higher lah. So for now, yeah, at least the all-time highs, or at least close to a multi-year, 4 5 year high. So I don't see any reason why to be too worried. Even if there's going to be a pullback, we'll still be looking for higher prices after this lah. It does look a bit stretched at this point in time. Possibly could be somewhere around here. So it could just do some sideways movement over the next few months, again to build another base before we launch higher here for REIT.
Okay. So another question to Mr. Kok Eng. Okay, so what about shares listed in SGX and Hong Kong? So for today's webinar, we'll be focused mainly on Malaysia stocks only. So if you're interested on our webinar on Singapore and Hong Kong stock, we will send you the next. We might be doing another webinar on those stocks as well. So just stay tuned. Stay updated to our newsletter. Okay, for the
Yep.
upcoming invitation. Okay. So far we have already answered most of the question. Okay, so if there's no further question from our audience out here, then we will end today's webinar. So I hope everyone has learned something new today. Okay, and also thanks again for spending your time to attend this webinar, and thanks again, Sesiang, for sharing your wonderful knowledge to all our audience. And thank you. Thanks all everyone, and have a good night.
Yep. Thank you guys. See you again soon.
Okay, thank you. Bye.
All right.